Let's start the show off with this, guys. Bill Gates just spent $95 million buying shares of the corporation that owns Bud Light, believing it's going to make a comeback soon. You know, there are plenty of stocks and industries that might be considered a bargain right now. How do you determine if there's enough upside to buy low and take advantage of the sale?
I think it's a great question and something that, we do on a regular basis. A lot of the times what we do is we manage money for our clients and ultimately go direct to the market. So I know, Chaz, you serve on the investment committee as well as a lot of the folks here on the investment team do, and have a direct impact into the decisions that are being made about, what do we have, what do we own. And when we look at this, when we're looking at, bargains and, determining kind of what could be a good mix to add to the portfolio, Chaz, I know one of the things that you do in a lot of the meetings that we have together is you first ask somebody to kind of explain the methodology of their investing approach. And I think, to determine, where can I take advantage of the stock market, I think that's kind of the first step in figuring out that approach, wouldn't you say?
Yeah, it's definitely where I like to start, because I find that, most of the time people don't have a methodology, or at least the investment professionals that they're using have never really articulated it to them. And so, yeah, I do think that's one of the biggest things that are going to help you stay in your seat when markets get choppy, is knowing what the plan is and knowing why do I own these stocks. And a good part of what we do to help clients make money is to buy low and sell high. And I think that's really the strategy that is behind value investing, is what Chris was referring to as finding stocks that are undervalued.
Yeah, I mean, that really comes down to kind of the analysis process of, what you go through when you look at your investment approach. And I think, as you point out, it's important to have a defined strategy. Mm-hmm. And there are a lot of strategies that are out there. Some are good, maybe other ones are not right. What oftentimes you'll find is many investors will jump from one strategy to another if they feel short-term the results aren't working exactly the way that they want. And mm-hmm. The challenge about switching methodologies or processes, it oftentimes can lead to making short-term emotional decisions, which usually result in painful experiences when it comes to investing. Yeah. When you're looking at the term of like value investing, so you're trying to find some of those bargains that are out there, that have good upside potential. One of the websites that we oftentimes use is Morningstar. So Morningstar.com has some free versions. It also has some paid subscriptions that you can use. And I like a lot of the fair values that they take a look at. Mm-hmm. They'll do kind of an analysis on stocks, and they'll give their analyst outlook and opinion on stuff. Yeah. We have a close relationship with a company out of Chicago called First Trust, and we look at a lot of their analytical data that they provide with for our firm. We meet with them on a regular basis, and have talked to them about where do they see the upside potential and some of the downside. Even if you look at things like Morningstar, though, Morningstar might tell you that they feel the stock has a 20 or 30% upside. The thing that it doesn't tell you is it doesn't tell you, when that's going to happen. So the market is something that ultimately does take time. One of the key characteristics of being successful in the stock market is having time on your side. There's some studies that are out there that talk about the characteristics of being successful in the stock market, and the selection of the actual stock, meaning picking the right stock, I think is a pretty low percentage of what the characteristic right. is of being successful. A big component of it comes down to the proper mix-up and how you build out that portfolio from the get-go.
Yeah, the allocation. You're right, and there's a lot of different ways to skin the cat. There's value investors, there's growth. Just kind of for our listeners to understand a little bit better of what value means, because that's sometimes a difficult word to understand when it comes to investment. But value investing is really a strategy where we're trying to invest in stocks that are undervalued based on their intrinsic value, and that's where the art form comes in, is to determine what's the company worth. But value investors typically try to identify companies that have strong fundamentals like earnings, dividends, assets, good cash flow. But for whatever reason, maybe they're just overlooked. Maybe they're thinly traded. There's just not a lot of information about them, which means they're mispriced. And then, the market, for whatever reason, has a lower value on them. And so that's where a value investor is really trying to profit, is finding those mispriced assets. I wanted to talk real quickly about one of my favorite books. I like to read books about the investment world and just trying to stay up on it. And one book you can check out is called Good to Great by a guy named Jim Collins. And it doesn't specifically talk about value investing, Nolan, but it does offer some insights and some principles that our listeners can use to potentially identify value investments in general. And so the book's based on a research project that was headed up by Jim Collins, and they looked at all these companies and why some of them went from good to great and others didn't. And so Collins identified these 5 principles that would help distinguish companies that might be undervalued but offer good investment prospects. One is good leadership. So level 5 leaders are the people that are humble, they're professional, they're concerned with the long-term success of the company, and not just necessarily their ego or the status quo. Also, look for companies who ask the question, first who, then what. So that means, who do they have? What is the vision for the company? If they're able to articulate that, great companies typically get the right people in the seat first, get them on the bus, is what Jim says, and then they decide where they're going to go. So first, who do we want on the team? Then what? And then the one that I love, I talk about this often, is the hedgehog concept. So companies that have the hedgehog concept typically go from good to great. These are the simple but powerful idea that guides the strategic decisions in pretty much everything these companies do. So something that maybe they're deeply passionate about, or something that is going to drive the economic engine. But whatever it is, the hedgehog only has one thing. For defense mechanism, they curl into a ball. That's it. Whereas I talk about the wily fox has all these good ideas to try to capitalize on the hedgehog, but every time all the hedgehog has to do is just curl up into a ball. So these companies that focus on doing what they do best, not trying to diversify into too many businesses, can potentially offer good value opportunities for our investors.
So really, I think, when you're looking at it and you're trying to figure out, how do you look for the right type of investments? This is absolutely one of the things that we're going to be talking about, Chris, as you mentioned, coming up on October 11th. It's our semi-annual economic update. It's 6 p.m. at the Hilton Garden Inns in Perrysburg. Reservations are required, but we're going to be talking about, how do you put the odds in your favor? How do you finish 2023 strong? And more importantly, how do you get positioned to go into 2024, which, as we'll talk about here in a couple of minutes, could be a pretty volatile year. So that information is available. We would love to have you come out and continue the conversation about where to take advantage of the stock market and give you our insider guidance.
You may hear this advice that Nolan and Chaz are giving right now, and it makes sense, clearly actually being able to put it to work for you, knowing yourself and taking the emotion out of it could be a little trickier to do. We are an emotional species after all. If you need a little help with that, again, the Economic Summit coming up in October, you can go to arhq.com, click on the events tab to go and reserve your seat. Or if you can't make it, or you just want to jump the line and sit down with the team and start talking about your strategy going forward in retirement, just go ahead and give a call, 419-794-3030.